Hej och välkomna till Garantums-studion och ett nytt fondporträttsavsnitt. Idag ska vi prata lite mer om tillväxtmarknadsfonder och tillväxtmarknaden. Men vad är egentligen tillväxtmarknader? Förenklat är det länder som är i en process av en snabb industrialisering och ligger i en betydande tillväxt för att egentligen förbli en mer mogen ekonomi. Och idag har vi med oss Tim Love som är då ansvarig förvaltare för GAM Sustainable Emerging Equity. Och det är ett ständigt arbete där man tillväxtmarknader som består av ungefär 20 länder och därtill även flera olika valutor som man behöver ta hänsyn till när man förvaltar en sån här typen av fond. Welcome Tim, and thanks for coming.
Thank you.
So you've been active for quite some time now, over 30 years I believe. What do you find interesting within emerging markets and your fund as a total investment portfolio?
Well, the emerging market fund that we have been running for, in this case, for over 11 years on this particular format has been brought into being because we wanted a consistent long-term outperformer to that of the MSCI Emerging Market Index. In reality, the fund has outperformed over 8.5, 9 years of that consistently. Sub-6 tracking error and, excuse me, an expectation of 2% plus net of fees return to clients. That compounds very nicely. We do so in a diversified way, 120 odd stocks. We're very liquid, and we do so with good upside to downside capture and very strict risk management and portfolio construction tools. With a very experienced team of over 25 years pretty much in all the top three. I like running money, not people. I spend most of my time with the companies. We have an element of top-down because so often emerging markets can be a brilliant bottom-up call but in the wrong currency, credit and implied vol, and therefore it's very good to have an element of top-down to say go into that currency or that country or that regulatory environment, and as a result we can find high quality presenting cheap but also in a currency which is also cheap and appreciating with a credit positive momentum. That gives you an extra kicker in terms of your timing and your stock selection with a very, very experienced team. So I think net, it gives you an extremely good long-term consistent outperformer on the index in a part of the world which is 70% of the world's populations, 2/3 of the world's GDP, and is a mere 11.5, 12 of the all-country world index. So at some stage, the rest of the world will discover emerging markets.
Interesting. So around 3 years back, I believe, you started a sustainable strategy of the fund. What opportunities do you see within sustainability and emerging markets? Yeah.
Driven by client demand, many ask for an ESG or a sustainable development goal compliant fund in addition to the core long-term outperformer. We incubated one for 3.5 years. We've now brought it to the market as of this last month, and it's done very well actually. It's beaten the underlying MSCI EM index. It's also done the same for the ESG leaders. Its objective is sustainable but also a risk return to an index. So it's not in ideologue SFDR 9, it's an 8. It could be a 9 in terms of the stock selections with a very small tweak. We like to be in the room, being an agent for change, being a steward of capital and engaging with that company to lead them to the green bonds, to lead them to the changes on the E, the S and the G. We have a very good indication of interest in this fund because it not only has a minimum single A MSCI target or minimum in the prospectus legally, but it's actually a double A, on top of which it also has a minimum of 30% lower carbon footprint to that of the index, and it's actually more than 60% lower, with a zero reputational risk as we stand at the moment from a third-party assessment from MSCI. Sustainalytics look at it regularly, our own external and internal PRI and ESG teams independently monitor it and check the certifiable records of our engagements. So an awful lot of work going on there, but it's a blend of both being SDG and ESG aware at the same time as being risk return aware and being a force for change. As an ex-Pricewaterhouse accountant in the old days, I like audit, rubbish in, rubbish out on data otherwise. When you're identifying high quality, waiting for cheap, and therefore we are an agent for change in terms of audit tenure. If an audit is not turned over every third block, then by definition we'll be an agent for change to that effect. It has to be clean data. Yeah. And if the chairman is also the non-exec chair, then I've got a real problem on that too. So you've got to have gender diversity, you've got to have independence of judiciary and executive, both at country and at stock, and you've got to have an audit turnover. That way you can start your governance journey and then overlay your sustainable and your social and overlay your environmental goals. As I say, single A with, in this case, a 30% lower on the carbon emissions, both of which we've exceeded handsomely.
Looking at emerging markets for quite some time now has been looking very attractive and investment opportunity compared to developed markets. What's your take on the investment?
Many people ask me why on earth emerging markets has gone sideways for close on 14 years. And I always say, reverse the question. In the last 2.5 years, you've seen the dollar go to a 26-year high. That's normally the kiss of death for emerging markets, as the money is sucked out, taken home, put it in a US Treasury and sit on it. And when that happens, risk off, and normally a bunch of skittles go down pretty quickly. That was the Asian crisis back in the late 90s. It was capped off in those days by SARS, which was the disease of the day, which took you down to low 2002s, and obviously the deflation of the dot-com boom, all of which rhyme with today. But the valuations today are as cheap as they were at the bottom of that in 2002. It subsequently led to the 2003 to 2008 monster bull market in emerging, which knocked the cotton socks off a developed world quite happily. So by definition, you're in that zone. The question really is, what's the catalyst? Dollar down, UST Treasury yields peaking and coming down. Liquidity flows arbitraging the valuation difference from emerging to developed on both value, growth and yield opportunities. And so there's an incredible coil spring opportunity here. But you're right to allude to the fact that it hasn't actually unsprung in our favor for quite a while. That doesn't mean to say that when the last person gives up, that's exactly when it happens, which is normally what markets do. When the peak pessimism is there, darkest before the dawn. And I think you're pretty much at that point. And the other point I'd make is the resiliency of the earnings. What is emerging markets? Perception versus reality. Fundamentally different. Insofar as at a stock or a sector level, what is an emerging market? It's high-end value add. It is robotics. It is right through to semiconductors. It is EV centers of excellence in China. It is the EV tail, which is the lithiums, your platinums, right through to your rare earths in emerging markets. It goes on and on and on in terms of being very, very high value add, whether it's robotics through towards consultancy in India, feeding all of the US majors on the consulting data. So why is that an emerging market? That's a semi-developed world. And if you did it on country, it's Korea, it's Taiwan, it's Hyderabad, Bangalore in India, basically. And then on top of which you've got the core plays in China. Put that with the Gulf, which is 10%. That makes up 80% of emerging markets straight away. 70 in Asia and the 10 in the Gulf. Put on a 10% in LATAM, which is Mexico, onshore, reshore, nearshore, with some biodiesel in Brazil, and you're already up to 95s. And then, frankly, it's a little bit of platinum exporters in South Africa and 2% in Poland and Czech. That is emerging markets. They don't sound like the old emerging markets 15 years ago. The top 9 of the top 11 emerging markets are investment grade this cycle, and they're A or double A. That's a different world to the triple Cs we had 15 years ago. We've mended the roof while the sun was shining in the last 15 years, and we've really gone up in investment grade, liquidity, diversification opportunities, and differential narrowing to that on the credit risk to that of the developed world. So coil spring for secular and for cyclical reasons, brilliant entrance point, wait for the catalyst, dollar down, rates down, and get in early.
Really interesting times ahead. Thank you for coming.
Pleasure.
Always good to see you. And I hope you see you soon again.
Will do. Thank you very much indeed.
Thank you. Och för er tittare så hoppas jag att ni tyckte det var intressant. Och Teams fond finns här på fondplattformen. Om man är intresserad, gå in på marknaden redan idag. Och håll utkik här framöver för nya intressanta fondporträtt. Tack så mycket.